The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you rowing and prowling with us out here. We have the Dow Industrials up 390, NASDAQ up 156, S&P's up 40, gold contract up $42, trading at $17.30 an ounce. You get silver up 29 cents, $15.17 an ounce, or light sweet crude. Just depends what second of the day it is, folks. Right now, this contract is up $3.14, $14.66 a barrel, notes and bonds. We get the 10-year right now down 6 ticks, trading 139.07. The 30-year off 13 at 181.27, and King Dollar down 96 ticks, trading 100.162. We have the euro out here at 108 to 1 US dollar. The yen is at 107.84, and the British pound is at 123 to 1 US dollar. Tom O'Brien, what's going on?
Good Wednesday morning. How we doing?
And we're riding the cowboy, man. We're riding the cowboy. We're on that roller coaster, as our man, Mr. Kevin Hinks at TD Ameritrade would say.
How about that oil roller coaster, maybe in the positive side today?
I'm telling you, man. And there's a lot of action here. The USO is going to go 8 for 1 next week. Bottom line, we'll talk about all these oil yings and yangs. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think or Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here. You want to understand defined risk, option strategies, futures, outstanding program, 11 to 12 every day, trading day. If you haven't test-driven yet the Think or Swim platform, great time to do it. You're sitting on the website right now. Hit that button, bring it up. They'll allow you to trade paper money. Follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Well, I think you're looking at a calmer market today because I think you're looking at a calmer crude oil market.
Yeah.
And I think the rest of the market is feeding off of that.
Yeah, it is.
I think this two-day trading crude oil really, put the jitters in the overall market, and I think you saw that. So I think a calmer crude oil market will lead to a calmer stock market today.
Yeah, you can see that. There's no doubt. This oil deal was is quite a deal. And as we said yesterday, it's pretty nice that the retail investors aren't involved in this, okay? Because this is like still a mess, right? I mean, really, do you know what I mean? It's nice that oil's bouncing back here, but you can see yesterday that move in the oil contract yesterday, folks. You're putting up 7,000. It's 1,000 a point, and I think we moved about 13 points. So it's like, oh my God, yeah.
I think the interesting thing that people can take away from the crude oil market is, and Ben Lichtenstein and I talked about this a little bit this morning. If you go out 150 days to the October contract,
yes,
it's trading $27.50.
Yep,
and relatively stable. You know what I mean? It's up 280 today, and things are relatively stable in as you go further out.
Yes.
Which means the futures market is seeing this as a short-term shock to the market.
Yes.
That hopefully over time will dissipate and get back to normal. But the bets are being made when that will be, right? And you mean, Ben Lichtenstein and I talked about something this morning. What got hit during this whole sell-off? Anything having to do with consumption, right? What rallied during this? Anything having to do with risk-off and safe havens, right? I mean, all the grains are sold off. Crude oil, copper, natural gas. Think about this, guys. What we don't even talk about: ethanol, corn, right? And how crude oil feeds into ethanol, which feeds into the corn crop.
Oh yeah.
So I mean, the effects of crude oil are it reaches way into other parts of the economy. So I think a more stable crude oil will make a more stable commodities and stock market across the board.
Yeah, listen,
definitely, right?
It's amazing that we got to a negative, folks, when oil still runs the whole world. I mean, it's like, really? But listen, there's that much oil. That's the other side of this, okay? You know, there's no two ways about that. The thing that, I mean, Netflix, Kevin, came in with some monster numbers out here.
Yeah.
You know, how about Chipotle, right? Oh, my God.
Right.
That, you know,
Right.
folks, they actually did more than they expected to do, and it's on takeout. So coming back into this economy, that's going to be a monster. I mean, they're going to have it both ways, right? They're going to have the takeout going, you have the in-stock going. It's pretty amazing, man, you know?
Right. Well, the great thing about Chipotle and their CEO, Brian Nickel, is so ahead of the game. He's the Jamie Dimon of fast food.
Okay.
I really believe that.
Yeah.
Because here's why. He had ordering through an app, ordering online and picking up. They had that infrastructure already there before this problem hit. So it's not like, you know, they were attempting to meet the economy, but the economy went right at them, much like Netflix, right? I mean, Tommy, you know, young people love Chipotle. That is a young person's fast food. And they're flourished. It's not surprising that Chipotle is flourishing in this environment because they've got the infrastructure all set up to order online and deliver. It's the easiest thing you can do. Chipotle is set up, and the numbers show it, guys.
Yeah. I think it's so interesting when we go through all this, right? Like the chart of Chipotle up there. I mean, just the weekly from the market collapse of $940 to almost $400 to back to $855, that it just took the market a little while to figure out that even though things were cascading down, we were going to have to shut down the economy. There were going to be companies, but what a drastic pullback, man, to not figure out that, hey, you know what, even if things really shut down, people are going to need their Chipotle, and that rebound. It's 100% from where we were on the lows of March 16th, like a month ago.
Tommy, and what does that teach us? That teaches when the market sells off, they sell everything, right?
Yes.
Even when you shouldn't have been selling Chipotle in this market when they have everything set up to order and pick up and do everything right. I mean, that's why there's opportunities. In down markets and up markets, there's always something. The market gets it right a lot, but sometimes they get it dead wrong, like they did in Chipotle.
Which is pretty cool. And then if you flip that right into the option market, folks, okay, this is where we're talking defined risk. I mean, it's hard to comprehend that you had an $800 stock, you get a $450 stock, and that's if you want to go in the equity market. If you want to go in the option market, Kevin, right, as you well know and teach every day, it's like, oh, my God, the amount you're putting up for a defined risk trade is tremendously lower, you know, because, it could have went to 250, but guess what? It didn't. It went back to 800.
How about Amazon? How about Amazon going from almost 1,600 to almost 2,500, right? Similar deal.
Yeah. I mean, can you imagine, guys, what their numbers are going to be when they come out? Amazon? Oh.
Yes.
Yeah.
And what, you know, and the real, you know, the reality is, and what papers and shows will discuss later on in the post-mortem of this economy is that once you went to Amazon, you didn't go back.
Yes.
Once you went to Netflix, you didn't go back.
Yeah,
right?
I agree.
Once you started ordering food online, you didn't go back.
Right.
And that's what I think the post-mortem will be. And that's why these stocks, I mean, think about it. We're covering Domino's Pizza today. Domino's is hiring.
Yep.
In a world where everyone's laying off, Domino's is hiring people.
Yeah.
And that's
the new economy.
They were the first out there years ago. Pretty amazing.
Investing in technology, right?
Yep.
Seriously.
Folks, 45 minutes. Outstanding show. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me on, guys.
Thank you. Stay right there.
Kevin.
Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 351. You get the Nasdaq up 156. S&Ps are up 38. We're going to have that oil. We'll go over to that oil contract in a second. So this is going to get interesting. I mean, this is kind of my take on it also, that, we get back to at least somewhat normal going into September. And I know it's, we're coming into May. But that's Mnuchin just come out, and he says, so Mnuchin expects the economy to opening late August coming into September. So that's a heads up, man. I mean, when you got, I think it's real. You know what I mean?
I think it's real as well.
Yeah.
We talked about it, and to even hear it like that, right? So schools in Florida canceled, Massachusetts canceled as in for sure throughout the year.
Yeah.
Seems like a natural progression of the summer, right? You have kids on vacation.
Sure.
Are you going to push back everything? There's going to be a start. Well, guess what? A good time to really maybe swing it if things are good is kids go back to school.
Right.
Things open. Life is kind of normal again. But crazy that is talking about 4 months approximately. Florida schools would start late August, basically 4 months on the dot from right now. And man, it's been a good 5-6 weeks now that things have been shut down already. But amazing to think it's already been 5 to 6 weeks, right? Doesn't it seem like time is crazy, man? When those first orders started coming down, it was at least March 15th for Florida, if not prior. Yeah. Oh,
listen, man. There's no doubt. I mean, I lost track of time because you got to picture something, folks. Okay, we have. In St. Pete, we have they're small floors, but we have 2 floors, right? And there's me and 2 producers in the office.
Sure.
So it's pretty funny. Do you know what I'm saying? It's like, okay, So oil. Let's go to the whisper number. Let's see what we got here, right?
Okay. Yeah, man, oil. My goodness, right?
Oh,
I mean,
totally.
I got the chart up here while you're doing it as well. Let me put it on a 15-minute because just the run, man, that we got. I mean, this contract, we started out the week Sunday night at $26.78. We just dropped down to $6.50 yesterday. The run up already today, though, from $7.45, we were at $11. We went above 16. We're approaching 14 now in that contract. So what are we looking at for our whisper number in crude?
16 million barrels.
Okay.
The survey
16
number
million.
is 14 million.
Seems like a reasonable estimate.
Yeah, I'm gonna go with like 24 million.
Throw it in. Yeah, go big. Go big or go home, man.
You know, we know that there's you know, I guess the build would have to do with, hey, we'll find out. The build would have to do with the aspect of how much is there. We know that everything is full,
Sure.
right? You know?
Sure.
So, pretty wild.
Did you submit it?
I submitted it, yep.
Okay, good. So I called you. I was going to say I called you yesterday,
yeah.
right? And it's just to speak. Now, what's going on is the contract's so far away almost of all of these contracts. I mean, you could make a trade just to illustrate if you wanted. Let's see what kind of premium things jumping around. All the spreads are way under the market because we just traded up $5 or $6 in the span of an hour, right? But, you know, maybe you had some exposure to the downside. Now, look at the premium this is charging you, right? This spread from 14 to 11.
Okay.
We're 15 pennies out of the money, okay? You start getting value at 14. Talk about a bid offer that's tight. Now, this one's a 1, but it's going to be a tight bid offer spread, which is nice. These are tradable, it looks like, you know. But they're making you risk $85, almost risking 1 to make 2 somewhere, you know, risking 83 to make 217. They're making you pay almost $1 in premium when you have only $2 in terms of that price. But I had mentioned to you yesterday, with only 20, some of these, if you get a spread that lines up pretty close to expiration, when you're $1 to $2, almost $3 out of the money, right? With a half hour, we were getting moves yesterday where these went from basically no market to being basically the one I looked at. It was trading 1 penny by 5 penny.
Yeah, right.
You know, and it exploded. You know, oil exploded yesterday. Let me see if it's on this this chart. Yeah, there it is, right there. It was no, it was this bar right here. So it was the 215 bar that went from $9.87 to 1947. But keep in mind that these contracts end at 2:30. So that was the final 15 minutes that had a 4-minute bar in oil. I'm going to be paying attention to what happens at 2:30. It was interesting nonetheless.
Oh,
you
yeah,
know.
big time. And, you know, so we were talking about the USO yesterday quite a bit, folks, okay? And now I just want to go over this because this is what's going on with the USO. So USO right now is trading down 15 cents, $2.67, okay? The net asset value is still $2.06, so it's 60 cents, okay, above it. Now, the USO is going for a reverse stock split 8-to-1. This 8-to-1 is going to happen after the close of April 28th, okay? So we're on the 22nd right now. So this is a heads up. You really got to wrap your head around this. Well, yesterday we were talking about the aspect that they filed with the SEC for 4 billion more shares.
Okay.
The SEC hasn't said yes yet. But what is going to happen here is this. They're going to have now 8 times the amount of shares the day that happens. Okay. So what's happening here, okay, is that you get a reverse stock split. One of the main reasons that you're running at a premium is that they can't make shares or destroy shares. Sure. It's a big heads up. My take on this, and I'm not saying that any retail trader should do this. What's going to happen here is monsters are going to come in and shot the heck out of this because the bottom
it should revert to the net asset value,
that's
right?
Correct.
So even if, and I like how it does say there, you know, that the reverse split will reduce the number of shares outstanding and result in a proportionate increase in the net asset value per share of the USO. But that gives the ability, maybe it has to go back to the net asset value at some point in time in the future. It could be a very long time. My guess is it's going to be shorter than you think as this market gains some stability again and that thing calms down a bit, that it reverts to that level. Yeah. Yeah, and I'm glad what you just said, Tom, because meaning that you really don't know when this will happen, folks, okay? Because so I'm coming into work this morning, I'm saying to myself, I say, just shot the heck out of this thing. Do you know what I mean? I know it's 60 cents, but on the other side of it, I'm not going to touch it. And the reason I'm not going to touch it is that anything and everything could happen in this market because the market is so screwed up right now. That's the other side of it. Do you know what I mean? So there's a lot of easier things to trade that, you know, not that any of this is easy, but, you know, your probability to me is a lot better, but this is not over yet inside that oil market. It's just not over.
Inside the Dow, we look at the Dow. The Dow's up 400. Let me show you something, though. This is going to be pretty dicey, I think. You know, we get almost every stock that's positive in the Dow, and you're only up $400. That's not a lot. You know, we only have Procter & Gamble is in the negative. It's the only one. Yeah. So what you have is that you basically, you know, each stock, United Health's putting 47 points in, Apple 38, McDonald's 37, Microsoft 27. The Dow, to me, should be up a lot more than that. So I suspect as we go through this trading day, you're gonna see some selling pressures out here. Gold and the gold equities, we'll talk about that when we come back, but those things are off to the moon, man. Dow Industrials right now up 390, NASDAQ up 179, S&P's up 45. Tommy and I come right back.
Hi folks, this is Tom O'Brien. On Thursday, April 30th, I'll be holding an all-day online seminar where I'll teach you the essentials of my trading methodology, Timing the Trade. From 9 a.m. to 4 p.m. Eastern Standard Time, with a lunch break from noon to 1, I'll be covering quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and much more, all while the market is open in real time. When you sign up, I'll mail you a physical copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. You'll also receive a free month of my daily trading newsletter, Market Insights, a $169 value. This 6-hour online seminar will be archived if you can't attend the entire day live. My Timing the Trade webinar is taking place Thursday, April 30th, so don't wait to sign up. For all the details and to sign up today, visit the front page of TFNN.com.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Crude. And, you know, Tiger had said something in the den right before we had done this, you know, can the build get bigger when the storage is full? And that's what it looks like. Crude inventories rose 4.7 million barrels.
That's Cushing. I think the big number was 15 million.
Oh, okay. Oh, let's see.
Yeah, I saw it down there. There you go, 15 million, number 6.
Oh, there you go. Okay. Okay, cool. Yeah, they had seen 13.8. They're at 15.022. So, and then we'll get the whole thing here. Let's see what we got here.
Yeah, and no real reaction just yet.
And you really wouldn't
Appreciate it.
expect one, right? I mean,
Especially it comes in near estimate too, right? So
right. And you know that there's a huge amount out there. There's no two ways about it.
that market is just going to continue with some volatility, though. That's for sure, man.
No doubt. Let's go to Max in Fort Lauderdale. Hey, Max, what's going on? You there, Max? Nope, he's not there.
He's talking about the USO.
He's talking about, yeah, exactly.
Hello?
Yes, sir. What's happening, Max?
Oh, okay. I'm wrong a lot. I'm like Larry. I'm old like him. But when you were talking about the reverse split, the way I understand it, you get one share for every 8 that you own. So actually that'd be 8 times less shares than there would be. And the net asset value would actually go up 8 times to 206. So the numbers would still be the same, but it would just be 8 times the price, and you'd have 1/8 the shares.
Okay, that's absolutely correct what you said. Okay, and this is where the part that you have to get your head wrapped around, though. It's 8 times $2.06 because that's net asset value. Okay, except that you're paying $2.67 for it. It's trading 60 cents over the net asset value.
Well, I think that's good. Let it trade over the net asset value.
Okay, it's not
Because
good.
that means people want it.
Okay, that's what makes a market. But do you understand that it normally never trades over the net asset value?
Well, no, I didn't know that. But
yes,
but in these times, when people want a stock, they'll pay. Look at the PEs. They'll pay way over what the PE is on a stock if the people want it.
That's right. I think you still don't understand it, but what you're saying is right.
Oh, I understand what you mean about net asset value, but it's still a supply and demand thing. If the people want it, they're going to pay up for it.
You're going to lose money on it, man. So you can do whatever you want. It's your money. I get it, but that is not the way that you're mixing and matching an ETF structure, technically how an ETF structure is built, versus how an Apple on a PE that people will raise the price up. Let's say the PE, folks, starts at 19. Okay, so that's saying you put $1 in, they put $19 in, you make $1. Okay, and what Max is saying is yes, they can basically run the equity up and say, okay, I'm going to make it a 40 PE, I'm going to make it 100 PE. I get that. Okay, but Max, the way that ETF structures work is that most of them are staying at a net asset. Well, they're supposed to, in their perspective, even stay at a net asset value. So,
yeah.
Okay, brother.
No, that's what makes the market. Okay.
Have a great one, man. Have a safe one. Where are we? Let's go to John in Philly. Hey, John, what's going on?
Good morning, Tom and Tommy. Thanks for taking the call.
Sure. How you doing, man?
John.
I'm doing very well. I would like, Tom, to ask you, given your knowledge of stocks, using your Bloomberg tools and your real estate experience, to help me answer this question. RLGY, that's Realogy, that's the residential real estate network. It's down at $3.50. Does this thing have? Excuse me. Does the equity of this business have in its outlook a turn back higher? And I guess more importantly, is the balance sheet of this company the kind that can withstand what we're enduring right here?
So let's take a look at it. Realogy Holdings, folks, okay, everyone's going to be familiar with all these names. It's a monster. That's Century 21, Coldwell Banker, Better Homes and Gardens, Sotheby's. You're talking, if you're in the New York area, Cochrane. These are some of the largest real estate brokers in the world, basically. If we take a look at this is this crash like the rest of them. This went from a price point of $13 down to $2.09. Let's bring this back. Look at this thing. I mean, you know, this is like a disaster, there's no doubt. You hit 209. I mean, if you're going for a bounce, John, let me just see something. I'd wait for a pullback or something. To answer your question about staying in business, they're going to stay in business. And one of the main reasons is that this business here does not take a lot of overhead. That's what it really comes down to. Do you know what I'm saying? You know, they have large offices, but guess what? They don't have fixed payrolls. They have fixed office costs, but the payroll cost is not there. And, you know, compared to what they're basically taking in, you know, when they're selling a place, I'd say it's pretty large, you know.
Thanks for that input,
business
Tom.
in general.
There's so much devastation out here, and there's a bunch of equities that are way down, and my guess is a bunch of them won't come back. But, you know, some of them will, you know, going out 2, 3, 4 years' time. Right. We're going to look back and staring at charts together, and we're going to be looking at a number of stocks that are, you know, $20 or $25 that were under $5, you know, back at this time frame.
Sure.
I'm just wondering if this might be one of them.
It could be. What has also happened is this. So picture, no one really knows what the hit's going to be in the real estate business. And there's going to be a hit, folks. I mean, assets are worth less money. You know, so the real question is going to be, does inflation come in and then those hard assets actually go up? And so there is some transferability inside of the housing market in general. It's hard to tell, John. I mean, I wouldn't be buying that on the long-term basis, how you just set it up. Let's put it that way. Because of the fact, more so, that the business is changing and there's discounting that's going on in it. And the real question is going to be, does technology get more of those 3%, 4%, 5% numbers? Do you know what I'm saying? So, you know, it's going to be intriguing. There's no doubt. Listen, people are still always going to need a place to stay. And, you know, when you figure out, this is the wild thing, and I'm sure we've all been through it, folks, okay? When you figure out housing in general, and you figure out when you start taking away the 5% and 6% commissions that people pay, that's where all the profits go, man. Because it's kind of weird. Do you know what I mean? You sell house.
Thanks so much for your 2 cents. I appreciate it.
Okay, man. Have a great one. Have a safe one. Stay right there. Tommy and I are coming right back. We have the Dow right now at 418, NASDAQ up 188, S&P's up 50. We're going to be coming back with our man, Mr. Teddy Kegstad. We are going to be talking currencies. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 423, Nasdaq's up 198, S&Ps are up 50. Let's go over to our man, Mr. Teddy Cakestad, as we do every Wednesday at 40 past the hour. You can check out Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. That is your key to online Forex trading. Teddy Cakestad, what's going on, brother?
Oh, not too much. It's a quiet day in the FX market today.
It's a quiet day. Well, that's unusual, isn't it?
It's very unusual since we haven't had one in months, right?
Yes.
You know, so we've had some nice follow through. Remember last week we were talking about as the close of that day, we hopefully get some signals. We got a bunch of signals last week, excuse me, and it definitely helped to give a little lift to the dollar. But like I was saying last week, remember I was saying I think we're starting to settle into a consolidation range with the major currency crosses.
Yes.
And I think that's what we're hitting into right now is that yesterday we were still strong with the dollar, but not much follow through. I think we might still get another gush sometime between now and into the end of the week, a little bit, you know, but not much more. And most of the targets have already been hit from the signals that we had in some of the currency crosses.
Okay.
The U.S. dollar Swiss and the Euro U.S. dollar are right just short of their targets. And the thing is that these targets are coming right where you have previous swing high and swing lows, that if we take those out, those would reinforce the direction that it's currently going in. And I don't think that we're going to get that kind of follow through right now. I think that we're going to start to reach a range of containment for the major currencies. Not when we're talking like the lesser ones like the Brazilian real or the Turkish lira, which once again made another high today.
I know.
You know, I mean, those countries still, I think the dollar is a bull, but I think the dollar index, because when we had all these signals in, ironically, we also had a buy signal in the dollar index last Wednesday. And that pretty much came into the target zone yesterday. So we're pretty much at the lower part of a resistance band, if you will. Yes. And I think that that's going to start to contain. I mean, if Europe's going back online, we have states that are going back online. Obviously, we have a mixed bag of goods when it comes to economic numbers, and I don't think that any of those are going to be something that you really have to pay attention to for months, because they're going to be so out of line. You know, some things are going to be right and some things are being so skewed. But the interest rate component, I was looking at how gold fell off. Remember last week we were talking about how strong gold was holding up amongst the physical commodities, yes, any commodities. Well, then we have the interest rate component. Now, you know that my background is a 30-year bond, and I've been trading that since 1990. It was trading in the 80 handle back then. Now it's trading in the 180 handle.
Right.
You know, I mean, it's insane to think that the interest rates are going to stay at these levels. Now, the volatility just in the past couple of weeks, what's happened in the bond market and the 10-year market. Sorry about that.
That's all right.
You know, I mean, we haven't seen that kind of volatility, even when we had the crash of '87, or even back in the flash crash. I mean, these levels are so extreme, and we're at the buffer point. I mean, a month and a half ago, I was telling my girlfriend, she was talking to her personal financial advisor about her bond funds, and I'm like, there's not much room left in these things.
Right.
You know, now if there was no room a month ago, and I think this is why the currencies are starting to consolidate in the major markets, because there's an ebb and flow. We have the interest rates, we have the gold market, we have the currency market, we have the equity markets, and these all have their little sine waves, and we've come to this point now. The interest rates can't move. That curve cannot move. Where's it going? It can't be lifted no matter how much the Fed supports it. It's just riding this curve here. Now we know where the equities are doing. They're obviously volatile, but the currencies, since the interest rate is a component of that, the currencies can't keep on doing what they did for a month. That was crazy volatility because of algos. Now, because the interest rates aren't moving, where are the currencies going? I mean,
well,
honestly,
it's so cool what you're saying. I mean, it seems that the currencies have kind of figured out that no one knows what's going to happen in the next 3 months. So they're going to, because that's how I feel personally. Do you know what I'm saying? It's like, okay,
yes,
we're trading the markets, but the reality, folks, is that, people ask me day and night, particularly in the real estate market around here, what do you think? Well, I says, well, something's going to happen. Do you know what I mean? If I told you that I know where it's going to go, well, that's insane, because I don't think anyone does. You know what I mean?
No.
But I think we'll have a much better idea in 2 or 3 months. That's what it really comes down to.
Absolutely. Yeah. But what between now and then, it's kind of like funny. Remember how years ago, especially like in the 80s and 90s, when Memorial Day, Labor Day, you're like, oh, here come the sleepy summertime markets.
Oh yeah.
We may enter sleepy summertime markets in May, and they may last for 4 months.
Yeah.
It's remember September 11th. I said. Yeah. Back then, and when that happened, the markets were moving, and then obviously for 3 years it was a flat line everywhere.
Yeah.
Now that was a different type of impact, on the markets. I don't think we're going to have a flat line, but I think that we do need this after the major shock wave. We do need a pause. It's because who's trading out there? Honestly, all your retail traders had to have gotten blown out in the futures and the FX markets, no matter what, in the past month and a half. If you didn't have deep pockets, if you had positions on, and you tried to trade that stuff with being inexperienced, how many people do you think really made money? And if they did, they were lucky enough to be on the right side, they're probably going to burn through it once it starts getting choppy over the next month and a half.
And and what you're hearing, folks, okay, so picture, even personally, Teddy, right? I love trading futures. I went from trading futures just to the triples, because it didn't matter, folks, in this market here, whether you're bullish or bearish. There's no way that you can trade an S&P that's going up and down 50 points. It's impossible.
Yes.
So I can see where that whole thing has gone. There's no doubt about it.
And the margin calls. Honestly, how do you think the firms have handled the last month and a half? Now I told you months ago how I love this volatility, but I had to trade back less than half the size of what I was doing, because margins, for one, were increasing, not to mention this volatility, but that comes from experience and being disciplined, and I'm not giving myself a pat on the back. I'm lucky that I followed that path, and that has helped me to weather the storm. I don't think that's the normal case for the average trader out there, No,
because they haven't seen it, If you've only seen it once, folks, I've said this a million times. You can teach people certain things, but you got to go through the cycles, man, because you can't believe it. You can't believe that something can go so high or something can go so low so quick. That's the reality,
Well, we had oil at negative $40. How in the world is that? I don't even understand how there's not a circuit breaker at zero.
Listen. We got that question day and night on the network, man. There's no doubt, and it's the only one that does not have a limit. Period. And so you're talking a whole different ball game. Yeah. If we go back to the bonds for a second, this whole bond thing's going to get interesting, because we know that the Fed's buying the bonds, but yet they can't get to higher price. So that says quite a bit. Do you know what I mean? It's like, okay,
Well, no entity can move a market altogether, no matter what. They can influence it short term, but they cannot drive the market. They can't corner a market, and you can't control the market. It just doesn't happen.
Yeah, that's a great quote, man, because it's so true. It's like insane, unbelievable.
I'm getting ready for the big short in the bonds, though.
Listen. I've been a bull in the bonds for about 10 years. I went south, not this Monday, about 7 days ago. Yeah, that's the.
See you next week, guys.
We'll see what happens, man. Cooking brother, thank you so much, Teddy. Have a great one. Have a safe one.
Take care.
Stay right there, folks. Tommy and I come right back. Dow's up 385. Nasdaq's up 186. S&Ps are up 46. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 339, Nasdaq's up 171, S&Ps are up 41. We might have just saw the high in the S&Ps, folks. The S&Ps just spiked up 10 points and gave it up in a heartbeat. Pretty wild. And as you come over to our website at TFNN, folks, a week from tomorrow, man, Tom.
That's right.
I can't believe how fast time goes.
I know, it's crazy.
I'm going to be doing a workshop, folks. If you want to understand how to navigate these markets, I'm going to be doing a time in the trade workshop. Haven't done one, I don't know, 2 or 3 years. Bottom line, it's going to be an all-day workshop, 9 o'clock in the morning to 4 in the afternoon, 12 to 1. We'll take a break. We're going to be talking quality volume, swing points, ABC structures on the way up, on the way down. Bottom line, where you should be getting in, where you should be getting out, all of the above. What you get with the workshop, folks, you're going to get a copy of my book, which is $88. You're going to get the newsletter, which is $169. Plus, you get the workshop. It'll be archived. So if you really want to get your head wrapped around Confluence, ABC structures, quality volume, check it out right on the front page of TFNN. And gold, if you're in the gold market, folks, you get some major breakouts here. So we get some big action. We've been talking about Barrick Gold, Tom, and Barrick now is pushing away from the breakout area as Newmont had also. So this 7-year consolidation, bottom line, the markets are going after it. The XAU, HUI are getting closer. If we take a look at the XAU, we're at 110 right now. I think it's 114, the breakout. Let me just look at this. And the XAU can move in big increments. Yeah, it's 114. We're at 110.44. It's at 114. A couple of the high flyers are making higher highs. Dow up 343, NASDAQ up 161, S&P's up 41. Stay right there, folks. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman riding that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Yeah, look at him, folks.